Welcome to RISKSA TV. We're here at the first day of the 2014 Insurance Conference at Sun City, and we're speaking to Stephen Cross from Aon Global. Welcome and thank you for joining us.
Oh, thank you. It's great to be here.
You mentioned in your presentation that the smaller commercial market should be commoditized with no underwriting necessary. I think that might have upset a few people. Why do you say that? And what does this mean for people working in that space?
Okay, well, it should be, or it could be, or it will be. I think are probably three different ways of phrasing it. I think in the smaller commercial space, we're in a situation now where there is so much data available that it is quite easy for the information to be trapped and captured and essentially put into a machine learning type of capability. And if you think about how we ourselves learn as individuals, we're taught by people, we read books. Well, we can do the same when we're writing an algorithm for a machine, for a computer. And we can now capture so many data sets from both independent sources or self-generated data, and we can program the machine, the computer, to learn. Then there's no reason why we need to add the complexity and the expense of continued underwriting in the way that we're currently doing. So I think it's an efficiency play. I think it's the way the world is going anyway. And by the way, regardless of whether this will happen or not, I believe somebody will do it. It may not be Aon or any of the other existing brokers, it may not be any of the existing underwriters, but it will be somebody that will come in and take a layer of cost out and bring the product to the market, to our customers who purchase it in a more efficient and speedy fashion.
So that availability of data that you mentioned, that's a pretty big risk. What are some of the other fundamental changes in this business that you see happening now and going forward?
Yeah, I think mobile. Everything is now remote, it's mobile, it's connectivity. As people connect together and share data, it's still back to data. There's more information, masses of information. It's really a question of how you process it. And data processing feeds, as I mentioned, have increased dramatically. Data storage costs are dramatically down. That means more barriers to entry are less. More people can get into the space and start to understand it. So that is a fundamental driver of the change in the way we're going. I also mentioned buying behaviours as a driver of change. And it's not really just the youth of today, as I mentioned inside. Even the older generations are becoming very technologically savvy. And it's moving forward at light speed. And when you can, buy things online, research subjects online, get quality information, what then are you looking to your advisor to give you? What is the added value your advisor brings? As I said, in the smaller space, there's perhaps not as much as there was. In the larger space, I think the need for the personal advice to complement and supplement the data and the analytics that are there is equally important. So all of those factors, the speed factor, the availability of information, the distribution of information, the ability to analyze it, it's changing the way we're doing things.
Absolutely. What are some of the other risks that are faced in insurance distribution, and how do you overcome those?
Actually, I'm not sure you can overcome them, or you might not even want to overcome them. What you might want to do is to try and get ahead of them and try to figure out where things are going. So the risks, I think, I'd say from a purely selfish point, as in a broking standpoint, the risk is getting disintermediated. Somebody finds a better way to do insurance broking. But I will always bring it back to, unless we see what our customers want and how they want it delivered, we kind of deserve to be disintermediated. We cannot live with legacy computer systems, and we're continuously patching to the past as opposed to building to the future. So you might say legacy technology is a risk, but it's also an opportunity for someone, hopefully us, but it's always an opportunity for someone. So there's a lot of risk out there, and I do see risks to our industry that big distributors, and Amazon is a perfect example. Amazon, 10 years ago was selling books. Now they're in just about every retail business imaginable. And the thesis, or the reason for that, is really twofold. One is its massive distribution they have, and the second is the data and analytics. Amazon have now a patent pending to distribute goods before you've bought them. Predictive technology. That's a risk, but it's a massive opportunity for somebody like Amazon, and there are other firms like Amazon out there as well. And the broking industry and the underwriting industry needs to get to that same space.
Do you think they are?
Slowly, yeah. As I mentioned inside, a 326-year-old industry in the insurance industry, which started in the coffee shop. We've got to start smelling the coffee as opposed to just drinking it and see where things are going. I think they're going there. Actually, it's different paces in different geographies. It really is. Lloyd's is absolutely a tremendous market and bringing creativity and innovation to the table. There are other areas and pockets of that worldwide. But speaking to an industry generally worldwide, we're too slow.
What are your thoughts on what's happening in Africa at the moment?
You have a lot of very interesting risks that are somewhat unique to Africa. But with that comes opportunity. I think the expansion of the middle classes in Africa and the pace of expansion allows you, and this pace of technology, allows you to come in and capitalize that opportunity in a massive way. And feeding new premium, which you can do with an expanding middle class, into the marketplace really fuels growth, it fuels innovation. So I actually think you're sitting in a great prime time of opportunity, but there's a list of risks that go with that as well. And the political uncertainty, the strikes, the labour disputes, it doesn't help. The uncertainty in some of the regulatory regime, it doesn't help. So you've got to try and get your arms around that to be able to move it forward in a much more accelerated pace.
Lots of work for us to be done here then. Lastly, you questioned in your presentation whether we're building our own version of a black swan in the insurance industry. Why do you say that? What do you mean?
I did question it. I actually do not agree in the theory of black swan. I think that pretty much everything that has ever happened has happened in some way, shape or form before. I think there are many versions of grey swans and plenty of white swans, but very few black swans. But I have to start to think that all of the different data points that are coming together, the acceleration of the connectivity, everything is connected. The proliferation of technology, the accumulation of data, we are verging into a series of unknowns that collectively might be the great unknown, and it might be that future black swan. So I may end up believing in black swan theory ultimately. We shall see.
Yes, that remains to be seen. I certainly think you've given everyone at the insurance conference a lot to think about. Thank you so much for joining us today.
Thank you. It's great to be here.
For RISKSA TV, I'm Christy van der Merwe.